Japan has always been kind of on the optimistic side in Asia compared to, well, with the relations with the US and the trade talks. The reason was Trump 1 government really didn't hit Japan so hard. Then first steels and aluminium, most of the Japanese steel products cannot really replace in the US. Really specialized pipes that you really need when prices are going up, just prices are going up, not a big impact. And then, well, the focus was on North America of the current Trump government right now, Mexico, Canada, not Asia, but what the government is doing is, well, hitting its friends first. And Japan clearly is one of the most important friends in Asia. So Mr. Muto is rushing, convincing the US government, guys, we are not only exporting to you, we are the biggest investor. We are planning to invest even more. Our companies are coming in. They have a hard time already rebalancing with their production in Mexico, in Canada. Much more will go to the US. We need more energy from you guys. Your IT companies are huge exporters of digital services to Japan. So he will put all of that on the table. If it will be enough, well, in the current situation, anybody's guess.
Anybody's guess. What does that mean for the currency, Martin?
Yeah. Now, this is the other one. The other one means Mr. Muto is the trade minister, but now the currency and the Japanese yen is way too weak. Basically, everybody agrees to that. Japanese government and the Bank of Japan was actually fighting for keeping the yen stronger. It is such a long monetary expansion, such a long slowdown in Japan with more liquidity under Abenomics coming in. And this had an impact on the yen, which is overall too weak. The Bank of Japan is trying to keep it as strong as possible. The yen is strengthening because the US economy is cooling quite a bit. So it is more on the positive side it was before, but now the current US government is looking, well, any weak currency will get our special attention, and clearly Japan is in there. The Bank of Japan will now consider earlier rate rises than it probably wants to do for the domestic economy good. Let's see what it is doing over the next month.
And Martin, what does this mean in terms of Bank of Japan's monetary policy going forward? We do have that meeting next week. The expectation is that there wouldn't be a move, but we've got, as we were just talking about, inflation running pretty hot. We're watching for the details of the wage growth picture, which is looking promising as well. But you know, what is, I guess, stopping the Bank of Japan from normalising quicker? Is it really the domestic demand picture? Is it also the volatility we're seeing in terms of bond yields as well?
I was in the camp of saying the Bank of Japan will at least 6 months from now review what it is doing. So before strengthening, because the domestic economy is moving so slowly, and that is the main focus of the Bank of Japan. The dollar was the yen was strengthening gradually, so also less pressure to move from that side. But inflation remains so very high. This is partially because of the weak yen, but now we have everything going up, in particular vegetables. People are really angry. They are sensitive. They see wages are going up, but prices are going up faster. So the Bank of Japan is under pressure from the inflation side. And then also now in international negotiations, getting the yen quite a bit stronger. It might move earlier, not in this month. They will probably wait out. I think April could be already a situation where the Bank of Japan thinks, okay, we have to move, we have to keep prices lower, we have to keep people happy when they're getting to the cashier, and of course our global friends as well.